Hi, Phil Weiss of Prize Wealth Management here with a presentation discussing how to overcome doubt and uncertainty while staying focused on your most important financial goals. Who's this presentation for? Those in their 40s and 50s who are trying to find financial balance. Families who hope to maintain their lifestyle in retirement. Families who want to support their children's educational pursuits. Those who want to be more informed about what retirement might hold in store. Typically, it's for folks who have at least $250,000 in investable assets. Here's what we'll cover. Building a solid foundation for retirement. Understanding where you stand today. Knowing where you want to go. Building a retirement roadmap. And staying on course. My promise to you. A step-by-step process that can help you overcome market-related doubt and uncertainty while staying focused on your most important financial goals. Does this sound like you? I know I should save for retirement, but investing in a volatile market is scary. I don't follow a process in terms of my savings or investments. I have trouble staying focused on the long term, make too many emotionally driven decisions. I have too many competing financial goals. I'm worrying too much and not taking care of myself or my family. If any of this sounds like you, then I have good news. None of those things are the real problem. Those are just the symptoms. The real problem is what I call the shifts. We're going to talk about what those are in just a second. But know for now that once you make those shifts, you should be able to feel more comfortable about your retirement outlook. The real problem is you don't have a pathway to an informed retirement that can help you overcome the doubt and uncertainty you feel when the financial climate becomes more challenging. Once you have a pathway to an informed retirement, you'll realize that a down market can work to your benefit. You'll lower your chances of buying high or selling low. You'll be on the lookout for new opportunities. You'll feel more comfortable about your future and better position yourself to help others. First, a little bit about myself. I'm a CFA charter holder and a CPA. I started my career working for Deloitte. I've also been a writer for the Motley Fool and T. Rowe Price, and now I'm a CFA charter holder. I've been writing on financial topics for more than 20 years. Most importantly, I specialize in helping retirement-focused investors embark on a path toward an informed retirement. That's why I created the pathway to an informed retirement and formed Prize Wealth Management. This is my pathway to an informed retirement. What I want to do as I continue with this presentation is share with you shifts that you need to make in the way that you're thinking about your retirement that will ensure that you get on the right path towards retirement. In fact, as I go through this presentation and you take notes, you'll realize that you'll be able to do everything that I talk about here on your own. But you may decide in the end that you need some help. Shift number one, truly understand where you are today. It starts with understanding. When I meet with folks and start to truly get to know them, a lot of times they have information, statements, forms, and tools they've played with on the internet, but they truly don't have an understanding of where they are and where they want to go. If you're serious about having that successful retirement, you need to move away from having a genuine understanding and knowing that you have some tools, ideas, and assets. You want to move to where you have a clear understanding of where you want to go. After all, the successful roadmap to retirement starts with understanding. The second shift, build a plan that fits your actual goals and your lifestyle. The plan should be unique to you and address your goals and your needs. No two individuals have the same plan. We all have different goals and objectives. Our value systems are also different. These factors matter when building your plan. When setting your goals, think about what you want to accomplish. Why is money important to you? What does it allow you to do? Many people have goals that are more like a wish list. A real plan not only addresses your short-term goals, but also your medium-term and long-term goals. After all, retirement can last 25 years or more. We see here some examples of the differences between those short, medium, and long-term goals as well. Short-term can be repairs or having a cushion to protect your account from overdrafts. As we move out into the medium term, it could be planning for a child or a down payment on a house. Longer-term goals are often things like saving for your children's education or retirement. Here's a little bit of a look at a before and after. Having an informed retirement can improve your chances of living the life you desire when you retire. A great example of this is the current plan here is the wish list. It includes everything that you might want. The proposed plan takes into consideration actual goals and lifestyle needs. Building a plan can help you identify what steps you can take to increase the likelihood that you'll be able to live the type of lifestyle you want in retirement. Sometimes it may involve making sacrifices, but building a plan can also help you identify what's most important to you. I often go through the exercise described here in this quote personally. I firmly believe that having a vision of what your future will look like can help you achieve the future you envision. The quote is to formulate and stamp indelibly on your mind the mental picture of yourself as succeeding. Hold this picture tenaciously. Never permit it to fade. Your mind will seek to develop the picture. Do not build up obstacles in your imagination. The third shift. Before you have a plan, you may be subject to emotions, make the buy high, sell low mistakes. Having a plan can help you get off that roller coaster and allow you to travel a straighter path. What do I mean by that roller coaster? Well, there's a few things to remember. You have to consider what your asset allocation should be and what you're comfortable with. You want that to be one that helps keep you from becoming too emotional when the market becomes more volatile. Are you a high risk taker, moderate, or very low? Knowing your risk tolerance can be very important when determining your asset allocation. This is the real roller coaster, though. It's called the cycle of market emotions. It's one of my favorite charts. It shows how our emotions can lead us to buy high, the points of thrill and euphoria on this graph, or sell low, the bottom points, when we capitulate or become despondent. This cycle repeats itself over and over again. Having a process in place can help us minimize the impact our emotions can have on our investment outcomes. The fourth shift. Your initial financial plan represents where you are at a point in time. It's designed to take you from point A, retirement uncertainty, to point B, an informed retirement. Unfortunately, that path is rarely a straight line. It's important to commit to regular updates and reviews to make sure that you remain on track. It's also important to have someone help you bridge what I refer to as the knowing-doing gap. In other words, we often know what it is we need to do, but sometimes we need some help to actually accomplish those goals. Part of this involves plan maintenance. Successfully implementing your retirement roadmap includes regularly checking in on it with reviews and updates. This doesn't mean looking at your investments or financial plan every day. In fact, if you do that, it can drive you crazy. It also doesn't mean putting it in your junk drawer and letting it sit for a year or two. You must regularly check in and see how you're progressing. There are two standards in which advisors can operate, and this is the fifth shift. The truth is many people when planning for retirement are doing it on their own or have never done it before. They may also consider working with a broker who's interested in commissions and what they earn from working with you. Working with a fiduciary has your best interest at heart. Looking over your shoulder can provide the biggest advantages. Now I'm going to go over some case studies to show you a little bit about how this can help. The first case study is Bob and Leslie. When I first met Bob and Leslie, they were working with a broker. They were unaware of how much they were paying for their investments. They also were not making any changes to either their investment portfolio or that of their children. After we started working together, they were able to actually reduce their spending on financial advice, as the mutual funds that their account was invested in often had expense ratios in excess of 2%. They had a portfolio that better fit their needs, and they had a more informed view of what retirement might look like. Our second case study is Don and Lucy. When I first met Lucy, she was unaware of the spending path their family was on. If it had continued, their debts would have grown. Now she and her husband have a better idea how much they can spend and save to live the quality lifestyle they want. They're better positioned to achieve their retirement goals. What did we accomplish as we built their plan? They had a budget to help them better manage spending. They had confidence that their college tuitions could be paid. And they had greater confidence about retirement and their investment portfolio. A big part of what we walk through today is my pathway, the roadmap I use to help my clients get from where they are to where they want to be in the future. Here's what we covered today. Shift 1, truly understand where you are today. Shift 2, build a plan fitting your actual goals and lifestyle. Shift 3, avoid the roller coaster emotions of investing. Shift 4, commit to regular updates and reviews. Shift 5, work with a fiduciary. My promise to you is a step-by-step process can help you overcome market-related doubt and uncertainty while staying focused on your most important financial goals. Now you have a choice. You can continue doing what you're doing today and hope things work out. Or you can choose to implement a pathway to an informed retirement where you really make all 5 shifts. I can help. I've set aside some time in the next few days to speak to you personally about how I can help you better manage turbulent market conditions. During this session, I'll work with you to craft a step-by-step game plan to help you build a pathway to an informed retirement. The cost? Absolutely free. Once again, who is this for? It's for folks in their 40s and 50s who are trying to find financial balance, families who hope to maintain their lifestyle in retirement, families who want to support their children's educational pursuits, those who want to be more informed about what retirement might hold in store. Typically, it's for folks who have $250,000 or more in investable assets. Why am I doing this? Giving is getting, the principle of reciprocity. It's an opportunity to provide just straight-up coaching on the best ways to better manage turbulent market conditions. Plus, I know you might want my help. If so, we can discuss it and see if it's a good fit for both of us. If not, that's fine too. Here's a link to my calendar. Use this link. You can go ahead and set up a free call so we can discuss the pathway to an informed retirement and how you might be able to implement it so that you feel more comfortable about your future. Spaces are limited. Sign up for a free strategy session now. Thanks again for listening and have a great day.